Everybody wants to get to streaming right now. And it's also the future of the business. If you are a TV buyer, the only way that you can hold on to the media budget long term is to own streaming.
I'm Eric Wilson, managing partner of Startup Caucus, the home of campaign tech innovation on the right. Welcome to the Business of Politics show. On this podcast, you're joining in on a conversation with entrepreneurs, operatives, and experts who make professional politics happen. Our guest today is Michael Beach, CEO of Cross Screen Media, a leading connected TV activation managed service for marketers and agencies. Before starting Cross Screen, he was one of the co-founders of Targeted Victory, and he had an extensive political career in the field prior to that. In our conversation, we dig into the nuts and bolts of building a business on the cutting edge of political technology. Michael, you started Cross Screen Media back in 2017, which is long before connected TV, CTV's heyday began. What was the landscape like that you launched into, and what were you seeing there that gave you the conviction to start a company in this space?
Yeah, it's a great question. I mean, probably the first way to look at it is how large the market was. And so in the 2015 and 16 election cycle, we estimate that there was about $300 million spent on all forms of digital video advertising total in politics. And that's about 12% of the total amount spent on video, with obviously the predominantly 88% of that being television. So the whole video market was $2.5 billion. And we saw obviously that streaming was growing really rapidly. We estimate there's probably only about $30 million of that 300 spent on streaming, video advertising, and politics that cycle. So it was so small that no one was really focused on it. And the other thing, kind of coming out of Targeted Victory was that we started there when kind of digital was nascent. And so we had to offer all these services, building websites and doing your social media and doing your fundraising and email. And when you do everything, you can't really be the best in class in any one thing. And here, really even all the way back to 2013, I saw the opportunity to be number one at media optimization around video advertising. And that was the future, that, the TV, it was kind of maxed out in terms of reach and frequency and time spent. And that every day, more and more of the time was going to be spent on streaming, but that it was not going to be overnight. Like, I think a lot of people kind of on the digital side just assumed that there was going to be this flip and it was all of a sudden going to be all digital. We looked at it like, well, this is probably a 10 plus year problem. And so we kind of got into the space, spun Cross Screen Media out of what was Targeted Victory at the time, and really focused on this one very niche problem. And that, I think, surprised a lot of people that we were going to be in this market. But that was kind of the plan from the start.
So obviously one of the risks of being first into a space is that you're not around or you're overtaken when a market finally matures. Thinking to, Facebook, I was like the 7th social media platform. Google was not the first search engine. What was your key to success with Cross Screen to being able to stick around, to have the longevity to be today where we are, where CTV is up there as an important spend for campaigns?
Yeah, I mean, that was a tough challenge then. It's, still, I think, a tough challenge today. We were unique in the fact that we had 140 people at Targeted Victory at the time, and out of that were probably 35 people that I would consider kind of product and data science. And in that, there's 20 that were really excellent, right? That we would have loved to brought over. We started the company, we brought 18 people over. And so it's a big payroll to start. The one challenge that I had to come up with was, you now have to capitalize this company, because when we started Targeted Victory, it was Zach and I, and, we didn't hire employee number one until there was revenue coming in the door, starting with engineers and data scientists. You need a little bit of capital. And so the needle to thread there was, what's the lowest amount that you need to get to a point where you're going to generate revenue and not go out and raise, $20 million and something. So
let me just get this straight. So you came over with an 18-person headcount. You didn't have revenue from day one, or did you have some solid leads on that?
Yeah, we definitely had some revenue, but it was an off year. And so we, our best customers that we did video advertising for Targeted Victory all wanted to come over and be, probably 90% of those people came over and were customers of Cross Screen Media, but we then had the kind of the age-old election cycle problem where most of that revenue wasn't going to start to hit until, May of 2018. And so we had to figure out how to make it 17 months without it. And that was a big puzzle piece because we started Target Victory. I didn't have to worry about that because it was just, we had to cover 2 people's salaries. We take on any project we could find. Whereas here we were only going to do video advertising. We were going to have a software model. Everyone was going to be on a subscription with obviously with a media component to it.
So you had to go out and get runway, basically.
Yeah, absolutely. And so, that was, but we didn't want to raise too much money because I think that was a one area of having the discipline of bootstrapping the first company. I couldn't imagine just running a business that was going to continuously burn money and go out and get, find other capital. So,
right. And we all know it's not an easy market to raise venture in, and especially giving people those returns that they expect. So obviously you push forward. One of the toughest things to master is this concept of product market fit. So, which is essentially building something that your customers want to buy. And it's really hard in the political space because you've got budget constraints and new good ideas like new technology we need to be using has to take money from somewhere else. There's no like R&D budget in politics. I'm curious how you navigated that process with cross-screen media, because I imagine you had this, what we call the double sales problem, where you have to educate your customer on the problem of measuring across screens, connected TV advertising, streaming, and then that you are the one to execute on it.
Yeah, I think, one of the areas too, you have this, huge market of, politics, which kind of looks at this kind of monolithic area. And then inside that was, video advertising, which is probably 60% of the budget that goes out is spent on that area. And one of the kind of insight that I had personally is, for a number of years came out with really disruptive offerings, but they were either too hard to integrate into a business or they had some negative byproduct, right, to a business. And so it might be best for the campaign. Can you dig in
and give an example of what that negative byproduct might be?
Taking on if you want to have a very kind of, SaaS or database model, then you're basically dumping a lot of the risk onto the agency or the consulting firm, where they've got to say, all right, I'm going to take on this $300,000 risk just using kind of run number. And I've got to figure out then how to break it up and charge my 25 customers to make that money back.
Yeah.
Or
hope that they spend enough on media at the end of the election cycle.
I gotta hope. And so I'm asking them to do a commitment 2 years before that happens, right? And so there's friction there. Or it's the fact that maybe you make all of your money today doing one thing, and this is drastically gonna so for instance, if you're a TV firm and all of a sudden all the data points to moving money to the digital firm, that's a zero-sum loss for the TV firm, right? And that's why you get this fighting on these campaigns. So first we had to figure out how to build a superior product, which I think we had before, but we were kind of disruptive. Obviously, the second is world-class customer service, because this is totally new to everybody, because we're either making the TV buyer understand digital video and streaming, or equally big challenge, we're making the digital firm understand television and media markets and gross rating points and all those things. So either one is a totally foreign concept. So our team is really important there. And then we've got to have positive economics. Like, it's got to be something that it's easy for them to adopt, and they can it's going to grow their business, right? Like, because a lot of firms will do stuff that's neutral, because they want to have a superior offering and grow their business. If it's negative, it's really hard for them to justify over a long period of time.
Right. Well, I think one of the hard things that, entrepreneurs come into this space and they see, this software as a service business model where there's just this recurring monthly subscription, which is what we all want to see as investors, is recurring revenue. That's just not how our customers operate. It is the money comes in at the end of the campaign when donors are engaged. And so a lot of people look at this, so it's a multi-billion-dollar industry, but actually it's like a multi-billion-dollar industry for 3 or 4 months. And we've got to figure out how to capture that value essentially 24 months out of the cycle. And it's a real challenge for the business model. I want to dig into an insight you had during a conversation that we participated in, was this idea of that, if you are going to be disruptive, you need to have essentially a broad enough customer base. It seems really obvious, but the way you said it was just like, oh, yeah, that makes sense. You can't just disrupt and have no customers out there.
Yeah, you got to find the balance of how can you push the ball forward and as far as possible, because there's tremendous opportunity. Obviously, in politics, there's an outcome you're going after, and if you're pushing solutions and your clients are still losing, then doesn't really matter. You're gonna your business is gonna go away. Or if there's so many ways that can negatively impact your business. So you got to figure out what's the way to push the business forward as much as possible, while also building a sustainable business. I think that's the area that is lacked in politics, is that people don't take on any kind of capital risk because it's so risky. And so then everyone ends up where we have bad products, right? And there's things that you and I have probably been looking for 10, 15 plus years, CRMs, things like this that are recurring conversations every 2 years. And people are like, why doesn't it exist? You're like, because there's no business model for it, right? No one in the right mind would take on the risk there. We've got to change the incentives, and then these things will appear. And that is not unique to politics, but it's probably a double challenge.
So what ideas do you have for shifting those incentives where something like that might work?
Well, I think overall some of it, is competitive dynamics where everybody, you see a big number of FEC report and you assume that everyone's getting rich and that they're, if they show $10 million FEC report, you assume it's $10 million of consulting, right? For instance, Target Imagery in 2012, I think we roughly $135 million from the Romney campaign. 99% of that was media, right? And so, but people would say, oh, they got paid, $135 million to do digital for this campaign. You're like, that's not how it works. That's not how you look at a TV firm's revenue. And so a lot of that's competitive dynamics are just people, dumping intel on other firms, but then that kills everyone's idea, because in order to have great products, we have to have great sustainable businesses, because we've been working on media optimization. That's basically all I've been thinking about since 2013, right? And we're very fortunate of that, and the fact that there aren't many other companies that have been able to have that kind of discipline. That's only because we've been able to build a good business, right? If we didn't have a good business, that would be a neat thing to do for 2 years and not go do something else, or I'd have to, pay the bills being a general consultant or doing another area. And we don't have many of those businesses out there, and we need more.
So let me ask you a little bit of a crystal ball question here. When do you think we'll see an election cycle where broadcast TV advertising isn't the number one expense for a campaign? Obviously, we're talking about campaigns on the top of the ticket, right?
Yeah, that's a great question. And I think first it kind of depends on how you classify what's number one, right? So if you're talking about all digital video and you put streaming in there, this will happen a lot sooner than if we're just talking about streaming. And so what's really happened is that streaming you've got three big buckets on the TV screen. You've got broadcast television, you've got cable television, you've got streaming. And then you've got on what would be the more digital bucket, mobile and desktop video and social video, which are huge markets kind of by themselves. But just looking at the TV screen, streaming has overtaken cable in terms of reach. And so the easy way to think about that is that the number of households that have, cable's reach is basically capped by the number of people that pay $100+ a month for cable TV. And that today is about 70 million households in the US. And streaming is kind of blown by that number. Streaming has also passed cable in terms of time spent watching. And so those are two big markers that happened last year. In terms of politics, we projected that streaming would overtake cable last cycle. It came in just under, but it was still, monster growth. And really the reason it probably didn't overtake
that surprises me, by the way. I guess good on us for being adaptive, or was that one side over another?
Yeah, I think everybody wants to get to streaming right now. That's and it's also the future of the business. If you are a TV buyer, the only way that you can hold on to the media budget long term is to own streaming. And if you're a digital buyer, the only way that you can ever be in charge of the media budget is if you own streaming. And so it is like ground zero now. And so we've got this chart that kind of walks through, who wins the streaming budget or who should. And I think the TV buyers in politics have probably armed up a lot faster in that because they saw the opportunity, because they were in the catbird seat. They had the revenue coming in. And now we're seeing a rush of digital buyers are like, well, why are we losing the streaming budget? Because if you have the streaming budget, you're always going to have more than 50% of the video budget forever.
Right.
And so if you go look back to the market, so broadcast then still has the largest amount of reach, though it's declining rapidly. It has the most money and it has the most frequency. So why it has probably a greater share of the frequency because the ad loads are so much higher. So if you watch an hour of broadcast, you get 16 minutes of ads. If you watch an hour of streaming, you get about 2 minutes of ads because so much of it's still ad free. And so it'll take a while for streaming to overtake broadcast in terms of ad impressions. It'll pass the reach probably as early as, in our most bullish case, next year, depending on the audience.
So what's the bucket right now, just so we have some numbers? Is it like 50% broadcast and 25% streaming, 25% cable?
So in 2022, we think it was 51% broadcast, 15% cable, 34% digital video. And then if you take out just streaming out of the digital video bucket, it was right around 16% of the total was on streaming. So 30+% of our time is on streaming, but only 16% of the dollars. Again, there's that imbalance of a lot more of it's ad supported or ad free, and the stuff that is ad supported has fewer minutes of ads. And so, the other kind of big picture thing that's happening is every 10% shift in time from linear TV to streaming is an 8% reduction in ad impressions. And this is like a monster trend because every Wall Street projection has the TV market, including streaming, growing 4% a year into the future, but our number of impressions are going to dramatically decline, which means CPMs have got to go through the roof, and like nobody's prepared for that.
Got it. So we're in this sort of, I don't know that it's an extinction level event, but it's certainly a do or die moment for political advertisers, it sounds like.
It's a big deal. And so if you look at the GOP primary right now, so if you look at the first 4 states, streaming and digital video can consistently reach 42% of that audience, which is really high because that is the oldest audience you will ever deal with are Republicans in rural areas that vote in primaries. And yet that's gotten up to 42%. You're probably in the 70s for broadcast, and you're in the probably 50s for cable roughly. But that's a big jump from a couple of years ago. So then the question becomes, what share of the frequency should go to each of these? What is the only way to reach one person? Because that's where a lot of these metrics, you can watch 1 minute of one NFL game and you're reachable by broadcast, or you can watch 1 minute of TV on Hulu and you're reachable by streaming. The mix is really important and hard. And that's kind of a core problem that we tackle.
You're listening to the Business of Politics show. I'm speaking with Michael Beach, CEO of Cross Screen Media, about all things CTV and building a successful business in that space. I want to shift gears now. You were a campaign cowboy. You were the national field director at the RNC, which is like chief cowboy of campaign cowboys, before you made the transition to entrepreneur, first at Targeted Victory and then at Cross Screen Media. So what would you say to the Michael Beaches of 15 years ago who are thinking about starting something new? I talk to folks all the time who recognize a problem on campaigns, and they sort of say, I wish someone would do something about this, or, kind of like what we were talking about, where these problems just keep happening over and over again. What advice do you have for them who are trying to maybe take that leap?
I think I was looking at kind of where I was looking at the world in 2008. A small thing I would say is to think bigger about the opportunity. And we were probably thinking really big, but in the end, it was probably way too small. But the big trend would have been to completely shift faster your mentality on people, right? And so in politics, you're 2 years max, you're working with people. As the election approaches, you're like working 20 hours a day and burning through. A lot of people just don't make it, right? And you're replacing people, you're layering people. It's you got to get to election day. The biggest impact in my career in our companies have been the people that have been there for 10 plus years, and the investment and that you make in those people and really shifting into, you're now in a marathon, not a sprint. And it's hard
because it's all year round.
It's all year round, and you're going to work with these same people for hopefully 20 plus years, right? Like I'm at I think we've got a couple that were at 12 years now straight. And that is like, those people are worth 1,000x what someone that came in for 2 years is worth, right? And because it compounds and the value they bring and the trust and all those things. So I think if you look at the really successful companies in politics and business, I mean, they keep a core team that's able to grow into new positions around it. I think investing in that earlier would have been smart because probably could have had more people that are around that long, but that length of time.
That's a big mindset shift from the just sort of churn and burn. And it's something that we're seeing across the industry, right? Is this, as more money comes into politics, it becomes more of a career. We demand more professionalization. And your background is in political, but you've made the shift to corporate and issue advocacy work. What advice would you share for other entrepreneurs who are in the political business, but obviously see that 2-cycle revenue kind of slump and want to get into something more steady? How do you bridge that gap and translate your political experience to new customers?
Well, I think when you're there, when you're in political, you've got a budget and you've got vendors reporting to you, really learning their economics and understanding the companies that have been able to sustain a business and grow over time. Obviously, they have superior economics and not necessarily falling into the trap of we talked about this earlier, a lot of people like attacking that as a bad thing, right? When you get an opportunity to work with a really strong firm that makes investments in better products and has people who've been around for a long time, and clearly they're doing something right, you learn what they're doing and what it would take to do that with one person, 2 people, 3 people. Because when you start, no matter what you had on a campaign, you're going to have to run a real business. Like the first day you go over and be a consultant, and I talk to people all the time about this, they all have the exact same problem set. Like it's like gravity. And so the people that really paid attention to the business side and were like, wow, I want to be more like this group. I mean, it can be, it could be a polling firm or a telemarketing firm or a direct mail firm. It could be something that's like, to you might be really boring if you're coming from the digital side, but they've figured something out because there's a lot of companies that pop up and go away. There are not a lot of companies that stay and consistently grow over time and then always evolve their business model because our space is changing so quickly. But I think that would be an area that I think I did a pretty good job of when I was on the campaign side, but I could have done even better.
So like a number of successful companies in this space, and something I emphasize to new founders all the time, you place an important emphasis on creating content, both personally and at Cross Screen Media. I read your newsletter every week. You've got a podcast where you're getting some big names joining. How does this fit into your overall strategy, and what ways does it contribute to your success? Because I'm assuming it's successful because you keep doing it.
Yeah, so we're at, this will be our 312th week in a row of doing the newsletter. We launched it in early 2017, and the goals have definitely changed. Back then, I think coming out of the 2016 cycle, coming out of, Targeted Victory, I think we were very aggressive in innovation and marketing where the world was going. Back to the kind of earlier conversation about probably we're very disruptive to a lot of people's business models and had a ton of hate, right? All the time. So we had trade groups coming after us. We had we were competing with basically every firm out there and some product we offered. Our friend set was shrinking. And so basically it was zero sum to attack us. And I think a lot of what we believed and what I believed was completely twisted in the market about the, TV advertising or, video or whatever. And so I tried to think, well, what is the best way? Why is this view permeating? Because it's, we allowed it to, and probably, thrown fuel on the fire. And so a newsletter was the easiest way to get, my thoughts out clearly to people. And also, I think the second thing was just to think, I always liked to write at Targeted Victory, but we were just very inconsistent putting content out because you always had so many things to do that you would trade off, an hour, I'll get to it tonight. And then you go. Whereas if I said, I'm going to put a newsletter out every week and I'm no matter what, it's going to go out, and it forced me to sit down and write it. And so the thing happens and it's really cleared. Then the next goal was it clarified my thinking and the thinking of our company around the market, because we were basically getting tons of feedback every week on what people understood, what they're sharing, what they're, then your list gets big enough and you start to, those analytics actually have an impact. Then you start to get invited to speak and do other things around certain topics. And so then it's now evolved into a big part of our brand because there's nobody that doesn't understand what we think, right? And it's really hard to attack how we think with falsehoods, right? Like you could say, I disagree with this, and there's plenty of room to disagree, but it's really hard to sling mud because we're out in public with what we think and we show our homework. And I think that's really important. And then it's just clarified our organization's thinking. And so, and I think it's just value. Like I read your newsletter, listen to podcasts, like the research that you put out or other people that are our peers put out. It's a lot of work. And I think that it's a tremendous value. And then you can build upon that. Yeah. I wish more people did that.
Well, you've hit on something that does not come up a lot when we're talking about this, but it's the organizing your thinking. And people who listen to this podcast know I have things that I go back to all the time. Same thing, folks in my training, they're probably tired of me saying it over and over again. But those sort of maxims or those principles it's sort of like mining, right? Where you have to keep digging and until you really find that. And then it's just so helpful to organize your thoughts. And it does serve as a forcing function when you're in these kind of chaotic environments.
No, absolutely. And I think it's just, putting your homework out in public, you have a discipline that you wouldn't have if you weren't doing that. And that's why most people don't do it, or they do it a couple times and then they give up because it's really hard.
It's hard. Yeah. And consistency really is the only secret sauce there. Well, okay. So obviously Cross-Screen Media's approach to TV, video advertising has been disruptive. You disrupted a number of incumbents in the industry who are now having to adapt. Take a look in your rearview mirror. Where do you see potential disruptions to cross-screen coming from? Because my thesis is that cycle of disruption is just going to happen faster and faster. This was a sea change to probably about 30, 40 years of media buying. I don't think it's going to be 30 or 40 years before we see a disruption. So where are you watching your flank?
Oh, definitely. And I think there's a kind of a business theory. I think it was initially put out by Jim Clark, the founder of Sun Microsystems, but has been shared, I think, a lot by the folks at Andreessen Horowitz, bundling and unbundling. And so idea is that you always have these two trends happening at the same time. And so we, Cross-Screen, were an unbundling, right? We were basically taking a item that was a part of a big agency, was one of many services, and running a whole business off of that. And that you and I, we had this kind of conversation about other areas that, technologies that could unbundle. And then, but at the same time, you're bundling, right? So there's an opportunity to offer a superior service by bundling more items together. And that is I think a competitive threat to us, but also an opportunity for us of which do we do, where do we do? You kind of can't do both at the same time, or you get to be mediocre at both. So
it's like shampoo and conditioner, can't do both.
Absolutely. Is our, even just a simple thing is our value proposition, you solve the TV thing, which I don't think is going to be solved for a long time. And then people want other, they want podcasting, the video game advertising, other things in it. Or is it you go more in the weeds on this one thing? Because then you've got, you now got planning, buying, and measurement are three things. So we've now bundled those three things together. Is our large enough market to offer any of those three things at the local space? Today, there's not, but 2, 3, 4 years from now, they definitely could. So I think you'll see both those trends continue, and you'll see firms that are successful. I think I always tell people to know what your strategy is and execute that. If you want to be a bundler, be a bundler. If you want to be an unbundler, be an unbundler. But the death zone is doing both at the same time.
Mm-hmm. Well, I want to thank Michael Beach for a great conversation. You can learn more about him in the links in our show notes. Definitely sign up for his newsletter, State of the Screens. It's definitely on my weekly must-reads list. If this episode made you a little bit smarter or gave you something to think about, all we ask is that you share it with a friend or colleague. The benefit, of course, is that you look smarter in the process, so it's win-win. Please remember to subscribe to the Business of Politics show wherever you get your podcasts. That way you'll never miss an episode. You can also go see previous episodes, sign up for email updates at businessofpoliticspodcast.com. With that, we'll say thanks for listening. See you next time.